You're watching the Fox 5 Morning News at 7.
If you are planning to retire in the near future, there are some new things to consider now. Financial expert Chase Wilsey is here to explain. Chase, good morning.
Good morning. Good to see you.
It seems like right now, when you say right now and you're planning anything, you got to do it a little bit differently than before. You say develop a plan.
You know, it's so important. I mean, when you're looking at retirement, it's such a big phase of your life, and you want to be comfortable with that. The easiest way to have comfort is develop a plan. What I mean by that, of course, you got to look at your budget. How much income do you really need in retirement? And then also you have to look at the other side of it. You have to look at, well, where am I going to get my income? Do you have rental properties? Do you have retirement accounts? You're going to have Social Security. You're going to have to bake all that into your retirement plan. And then also you got to understand what types of sources of income you're receiving that from. They're taxed at different rates, so it could have a big impact on your after-tax income. Again, really got to look at that. But if you develop that plan, you could have comfort. And just because stock market's down right now and oh my gosh, I can't retire, that could maybe not be the case. If you have enough in assets, your income streams are doing okay, you could actually look at still retiring. You still have to make sure you're still investing, which of course leads us to the next talking points.
Exactly. And before that, in terms of coming up with a budget, because I think for a lot of my friends, it's hard to imagine, you know, let's say you're in your mid-40s, you're 50, you're 55, thinking about retirement and what kind of budget, because you mentioned the budget you'll need when you're older. Quite frankly, I don't know.
Yeah, and it could be a lot different. It could be a lot easier, too, than many people anticipate. We have a lot of clients that, oh, my gosh, I don't think I can retire. And actually, when we start to look at things, we start to look at the withdrawal from their accounts, they actually can retire. You got to think about retirement. Most of the time, people in retirement have their house paid off. So that's not an expense that they have any longer. Your expenses oftentimes do come down at the beginning of retirement.
Right.
But, of course, as you get older, you do have to consider health expenses could go up as well. So you do have to kind of project out some different things.
True.
The big thing is, again, understand that plan, because if you have no plan, you're not going to feel comfortable when it comes to retiring.
Okay, let's get to the stock market now. Should people consider investing in the stock market? Because I know the philosophies are different depending on your age.
Yeah, and it's so important because right now you always hear people when they're getting into retirement, oh my gosh, I can't be in the stock market any longer. Our philosophy here at Wilsey Asset Management is you're never too old to be investing in the stock market. Reason being is when you enter retirement, especially now we talk about medical advancements, you could easily live to 100 years old. You could be in retirement for 40 years. Your time horizon is a lot longer than many people think when they enter retirement. And also the big thing too is with stocks, they're a great hedge against inflation. Think about what inflation is. It's the rising cost of goods and services. Well, who benefits off that? Businesses. As prices go up, now their sales are going to increase. That's going to make the companies more valuable. You just have to understand that they are going to move up and down in the short term. Again, if you're investing for 20, 30, 40 years, your time horizon can handle that short-term volatility over weeks, months, even quarters at a time.
You say it's all about good quality stocks, so we want to know what are the smart stocks right now, and also you're also saying to be cautious of those bonds too, right?
Yeah, and I talk about buying good quality stocks. What we actually do at our firm is we look at value investing. That means you're very cautious of the valuations you're paying for a company. I like businesses that are financial companies, for example, like a JP Morgan Chase. It's very well established. It pays a nice dividend, which can really help in retirement. I say avoid those high-flying stocks like Amazon and Netflix and Tesla. They're all great businesses that we use today, but if you look at the valuations, they're just way too expensive. That means, in our opinion, it has an elevated risk where you have a pullback. Reminds us a lot of the tech bust. You could lose a lot of that money in retirement. At that age in retirement, you want to take a little bit more conservative approach with the businesses you're buying. Don't chase the high flyers. Make sure you're avoiding companies with poor balance sheets because they go bankrupt, you lose everything. And you alluded to bonds there as well.
Right.
Be very, very cautious with bonds. I mean, you talk a 10-year note under 1% right now. How are you supposed to live off income in retirement that's not even paying 1%? You can't withdraw from a portfolio like that.
What should we be concerned about right now?
You know, I really think we will get through this. One thing, as I kind of talked about, is inflation. I don't think we're going to have inflation by any means in this year, but I think going forward, what we've seen is we've seen a lot of money come in from stimulus from the Federal Reserve. What that could mean is years down the line, we could have too much money chasing too few goods. That is what leads to inflation. That's why I believe, again, finding good quality stocks is going to be very, very important in today's day and age, because I think we will have inflation. We've had very subdued inflation for many years. I think it will accelerate over the next 10 to 20 years, and again, could lead to some problems for people investing in bonds or having too much cash in their portfolios.
And if you don't know which one's the right stock, well, that's why we have Chase. Huh? You just give Chase
That's what we're here
call.
for.
That's what I'm talking about. Chase, thank you so much. Appreciate the time this morning.
Of course. Thanks for having me.